Gold prices, along with the silver, had a fantastic run in the last few months. All the factors that have been active for the long time are working together, helping the bullion to rally towards a fresh lifetime high above $1920 level. Previously, it was hit back in 2011. Silver too is breaching barrier like flowing water, boosting market participants' confidence. Let's look how actually the gold prices are being increased in this recent times, corona times to be precise. So due to this COVID, the economies are getting hit. In order to maintain liquidity, the central banks like US Federal Reserve, Bank of Japan, European Central Bank, Bank of England, etc., are looking towards sending the money into the economy through helicopter. Ha, that's what helicopter money. It means these central banks will print the money like a digital credit or hard paper cash, which in turn reduces the value of currency. You know this, right? When there is more of a quantity, then the price actually gets lower. More quantity, less price. More quantity of currency, the value of it will decrease. In other words, this is called inflation. Over time, as the money flow in the markets and the economy increases, the value of currency will get decreased. So, in order to have a safe bet, many banks or financial institutions will turn these faces towards the gold, the yellow metal. It is considered as a safe bet whenever the times of recession. There are so many supportive factors for the current bull run and what could continue to drive the metal for the next couple of medium term. Some of the factors are major central banks have reduced their interest rate to almost 0% with a possibility of going in the negative territory too. Apart from the rate cuts, central banks have taken an aggressive stance providing the liquidity in the government in the market. All the actions taken will have a spillover effect on the economy, hence supporting the precious metal prices. Enormous liquidity push by central banks across the world is going to be underpinning fundamental support for continuation of gold strength. Also, equities are buoyant by the stimulus packages of the central government. Buoyancy is because the sentiments are more or less dependent on the information with respect to the vaccine against COVID. Rapid increase in COVID-19 cases and its impact on the global economies have created chaos in the market, supporting the bullion. And the trade war between US and China has reignited once again, increasing further distress in the market. Geopolitical tensions as well with US and Iran and other countries is increasing at a rapid pace. IMF has shown the concerns regarding the impact of COVID-19 on global growth and has hence revised its forecast for this year's growth at negative 4.9% from negative 3%. There is always a threat of inflation super spike somewhere down the lane. Within 24 to 36 months, due to such high liquidity in the system, the dearth of returns in many other asset classes to drive the money towards gold. Though currencies may stable against each other, they will lose their value against gold. And coming to the equity markets, it seems like they have factored post-COVID era too early. Prolonged slowdown impacting the global economy, or quick recovery having the spillover effect on the same. Both small, both shall have a similar impact on gold, leading market participants to sell in the dollar as the investors dump safe haven and focus on precious metal, that is gold. Going into 2021, the prices of the gold are expected to extend its bullishness by another 25% to test a fresh all-time high level of $2,500. This is as per CNBC report. Also, if you have a look at the past gold prices from the website goldprices.org, we can observe that whenever there is a global slowdown, there is a spike in prices of the gold. Look at the image here. So, considering the above discussion, I think there is still a little upside for the gold for the short term. As long as there is uncertainty in the economy, there is certainty in the gold price. So, I think it's good time to invest in gold, like gold bonds or gold ETFs that are being recently launched for 6 months to 1 year time frame, which would approximately give you a return of around, being pessimistic, 15 to 20%, because gold is already hitting its lifetime high. There is still a little upside, I believe. Hope this video is informative to you, and in the next video I will discuss very interesting topic on the new investors that are hitting the markets. Thank you.